What's going on, you guys? My name is Zach Harley and welcome to episode number 3 of my 1K to 1 milli challenge. In this video, I'm going to recap the week that just passed, August 31st to September 4th. Here we go. Okay, so I made a little PowerPoint for us to follow along. Let's recap what's happened so far. So we started the account on August 27th with $1,077 Canadian. In the first 2 days, on the 27th and 28th, we made $101.5 in profit. Now come September 1st, I had to pay for my data package. That came out at about $95 USD. And in the last week, from August 31st to September 4th, I didn't trade on Monday, I didn't trade on Friday, and overall we lost about $80. So it was not a good week. It was a red week for us. And in this video, I want to break down for you how to handle a bad trading day, how to handle a bad trading week, and what you need to do to correct it. So here we go. Okay, so I'm in Quest Trade, and as you can see, I'm in my account summary here, and the first thing you probably want to look at is my current value. We have $966.7 in the account that's accessible. So as you can see clearly, we're down from where we started. We lost all the gains from the 27th and the 28th, and it was a bad week for us. It did not go very well. I'm a little disappointed in it, but that's okay. Let me give you the quick run through just so you can see. These are all the orders that I placed. I don't have any positions open right now because I'm just day trading in this account. These are all my executions, so you can take a screenshot and do the math if you want. But in summary, we've got $966.7 in the account. We started with this $1,077, so we're down over $100 now. Not a great start to the challenge. I'm just going to be totally honest with you here, but that's okay. This is a good example of how I can teach you how to handle a bad day, how to handle a bad week, and what you need to do to correct your trading. So let's get right into that. Okay, so we're back in the PowerPoint, and what went wrong? Let's try to identify that first. Well, number one, my executions were bad. When I started on Tuesday, I made 2 different trades, and both of them, the executions were not good. I did not get in where I wanted, I did not get out where I wanted. I traded on a market order once, and it completely bit me in the butt. It did not go well, so I really need to clean up my executions. Secondly, I was trading against the market direction. The S&P was going down, I was buying calls. It was not good. I was trading completely against the market direction, and I need to eliminate that from my trading, and so do you. I also need to implement a better routine. There were some days where I just woke up, sat down on the computer, and started. What I need to do is go have breakfast, drink a glass of orange juice, go through my morning routine, and get set and ready to sit down at my computer and wake up early enough to do all of that. And then last thing, one thing that really bit me in the butt was holding my positions too long. There were 4 bad trades throughout the week, and I think 3 of them were green at some point when I should have executed or exited that position, and instead I decided to hold because I got greedy and thought it was going to run, and it bit me in the butt. And that is the primary reason why I lost money this week, is because I held too long and my executions were bad. So what I mean by executions is getting in at the price you want and getting out at the price you want, and not having that fluctuate when you actually make the trade. So that is everything that went wrong. Now let's cover what went right, because there were a couple of good things from this week. So number one was risk management. My maximum loss was $64, which is not very much at all, especially when you consider that I'm trading highly volatile options. I'm trading with a small account. Like, it's a pretty big risk to be trading options with these accounts, and so to only lose $64 on a trade is absolutely phenomenal. I'm super happy with that, and that means that I do have good risk management because I'm not going to blow up this account. I'm not going to risk everything on one trade. There's never at any point where my entire account was at risk with any of these trades, and my maximum loss here was $64, which is pretty good in my mind. Thirdly, walking away. On Tuesday, I made 2 bad trades to start. I walked away from the computer. I didn't touch it for the rest of the day. And that, looking back at it, was probably the right decision. Moving forward, that's what I'm going to do as well. As soon as I start a morning where it's bad, I don't feel good, I haven't had my routine, and I'm making bad trades, the best thing you can do is walk away from that computer, lock in the loss, and just get out of there and don't lose any more money. Nextly, sizing down. What I realized was when I had these 2 losses, I actually sized down my position, and it helped me out. It put less stress on me. It made my trading a little bit more confident, and it gave me the confidence to build up that position over time instead of jumping in heavy right away. So sizing down after a loss, and especially after a bad week, is completely key to your success, because now all you want to do is just try and build a little bit of steady momentum and get a couple small trades and build a little bit of a cushion so that you can then start to size up your trades again. Now, the big thing here is not blowing up the account. When you start with a small account, it's easy to say, okay, I made 2-3 bad trades. Let's just put it all on a call option for Apple or whatever it is. And if it works out, then I'm back to where I started or I'm doing really well. And if it doesn't work out, well, oh well. No, that is not the mentality. That is not how I want to handle this. I do not want to blow up this account. I want to treat this as if this is my only $1,000 and I want to grow it as fast as I can while still being responsible and managing my risk. So that is the goal here. You never want to take any trade that has the likelihood or possibility of even blowing up your account. So breakdown: Monday, I was out of town. I didn't make a single trade on Monday, so I was already down a little bit of time. Tuesday, I had 2 bad trades to start the day where I had terrible executions and I thought, this isn't working for me, this isn't my day, so I walked away. On Wednesday, I had 1 good trade and 2 bad trades. So it was kind of a mediocre day. The 1 good trade wasn't very good and the 2 bad trades weren't very bad. So overall, it was just kind of a negative day. It was almost a waste of time. And on Thursday, I made an excellent trade. I made a very good trade. I waited at my computer for almost 40 minutes before I made the trade, and we made about $80 in like 3 minutes. It was extremely good. And on Friday, I sat down at my computer. I went through my routine. I was super patient. I had a couple of orders waiting to get filled, as in if the price bounced back up, it would fill my order, and they just didn't work out. So after about an hour or 2, I walked away. I said, that's enough. I had a couple other things to take care of on Friday, so I went and handled that business. And now going back into Monday or Tuesday, I'm gonna be all set and ready to go. So here's the thing though, is I had to leave Friday knowing that I lost money on the week. So how do you handle that mentally and how do you get ready for the next week? Well, I went back to my computer, I went back to my dashboard, I looked at all my trades and I tried to figure out where I went wrong and what I can learn to correct or do better next time. So a couple of things that I've picked up here. Usually when I'm trading, I have the S&P showing on a large monitor. Now what I'm gonna do is I'm gonna show the VIX, the NASDAQ, and the S&P. They're all gonna be open when I'm day trading so that I can look at all 3 of them for a market analysis. I am also going to add the ADD. Now, what this is the accumulation and distribution indicator. And what I found is it monitors the New York Stock Exchange and it monitors price and volume to determine, is the price and volume going up or going down? Basically, are people buying or selling the entire New York Stock Exchange? Is money going in or is money going out? And what it can do is help you determine if a trend has strong momentum or weak momentum. And so you can use this in correlation with the NASDAQ and the S&P to get a better idea of how strong that trend is when Apple breaks through or bounces down or bounces up. Whatever the application is, you can use the VIX, the NASDAQ, the S&P, and now the ADD to get a better idea of where the market's going and what the market's doing. So I'm adding all of that into my trending and all of that into my actual day trading and my monitor up top. Third thing, I perform better on shorter trades. So now that I've tracked my trades for a good amount of time, I've noticed that I have a better win ratio and I have better wins when I'm trading short term. So when I'm holding my trades for 1 to 3 minutes, I'm winning 60 to 70% of my trades. But when I hold over 5 minutes, I'm below 50% because I'm just losing it completely. So what I'm realizing is I'm a better trader on short-term trades, basically on scalping trades. I can find those basically pinpoints. I can see where that momentum's going. I can get in and out of those fairly good when my executions are good, and that is what I am good at. So I'm going to focus on that much more often. And the last thing is I got burned a couple of times for holding at 10 a.m. and 10 a.m. is a specific time when a lot of news comes out in the markets. And so my goal now is to not hold any stocks at 10 a.m. I'm going to try and be out by 9:55. Back in at 10:05, and I'm gonna let that 10-minute period just sit there. I'm not gonna trade anything. I'm just gonna let it go. So these are some of the learnings that I've picked up since evaluating my trading from the previous week. Okay, so the most important thing in this video is the changes that you make to your trading once you've evaluated what went wrong. So for me, my number one thing was that my executions were bad. So what I've done is set up something called hotkeys. So on my keyboard here, I have 5 keys on the side of the board right here, and I can program these to do whatever I want. So I can program different keystrokes. So when I press hotkey number 1, what it will do is it will enter an order at a stop limit 10 cents above where the current option is, and it will execute that. So I can get into a stock or into an option automatically, instantly, right away, exactly where I want. I can program these to do the exact same thing to get out of my positions as well, and that's what I'm going to be working on this weekend so that I can get into one stock or one option, 10 options, 10 stocks, and get out instantly as well. So that is going to be a goal for me, is to set up these hotkeys over the weekend. Secondly is trading against market direction. So that was a problem for me at the beginning of the week. I have added more market internals. I am now adding the S&P, the NASDAQ 100, the VIX, and the ADD to get a better sense of what is happening in the market and get the market direction. Now, routine. This was my third problem. What I'm going to do every single day before I trade, I'm going to sit down, I'm going to have breakfast, I'm going to scroll through the news on my phone, and I'm going to drink a full glass of orange juice before I ever sit down at my computer. That is going to be my new routine every single morning that I go into. And the fourth problem that I had from earlier this week was that I am holding too long. When I went back through my research, I figured out that I am much better holding these companies for a shorter time period and making a smaller amount of profit than trying to let them run and hold it for a long term. So what I am going to focus on is quick scalps, holding the stocks from less than a minute to up to a maximum of about 3 minutes. That is what I'm going to focus on for the week ahead, and that is going to be my strategy. So in summary, I need to let you know, like, you are going to lose money on certain days and you are going to have bad weeks every now and then. This just so happened that I didn't trade on Monday, I didn't trade on Friday, so I didn't have a whole lot to recover from this bad week, so the whole week was red. However, how you handle those red days and those red weeks, that's what matters most. And when you get those red days, you get those red weeks, you need to size down. It will reduce your stress. It will help you trade better. It will help you build a little bit more confidence and a little bit more cushion, and it will help you feel better about your trading. The last thing is, every Friday, every Saturday, you need to evaluate and critique your own trading, and you need to figure out what went wrong, how you can correct it, how you can learn more about what went wrong, and how you can improve your trading as a whole. And you also need to journal. Journal is how I figured out that I was better at scalping than I was at holding them long term. It's how I figured out what trades work best for me, and it's how I figured out what patterns work best for me. So you need to take all of this into consideration and try and become a better trader. We are only down like 80 or 90 bucks from where we started, so by no means is this over. We're gonna pick this back up right away. I'm gonna be back at it Monday morning. I hope to see you there, and if you get anything at all out of this video, please consider subscribing because I sincerely appreciate it. Thank you so much, and we'll talk to you soon.